Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are buzzing in trade, and IREDA is also a stock that's been in focus ever since the get-go today, because remember, IREDA is one of the two public sector lenders that had loaned money to scam hit Gensol Engineering for buying electric vehicles, and yesterday in a regulatory filing, the company has said that it has filed a bankruptcy application against Gensol Engineering. It is the first instance of a creditor taking the embattled firm to the National Company Law Tribunal, which is the NCLT. Gensol owes IREDA 510 crore in dues. Remember, Gensol's managing director Anmol Singh Jaggi and his brother Puneet Singh Jaggi have resigned earlier this week, a month after the Securities and Exchange Board, which is SEBI, barred them from holding key positions in the company. Ever since then, Gensol has been hitting upper circuit, but IREDA in pressure today because they have taken Gensol to the NCLT. Gensol owes them 510 crores in dues, and on the back of that, stock under pressure, a 7-10% cut coming in on the stock.
Alright, that's about IREDA, but other than that, let's talk about Brigade Enterprise. And Ansh, take us through why is this counter is in focus today, believe one of the other earnings candidates.
That's right. So actually company had reported revenue of around 1,460 crore, which is down by around 14%. Net profit had also gone up by around almost 20% from 206 crore to 246 crore. But talking about EBITDA, that has come down by around more than 2% to 379 crore. Now if we check margins, then we are seeing good improvement of around more than 300 basis points from 22.8% to 26%. And with this, Brigade has actually recorded highest ever real estate sales value of around 7,847 crore for FY25. Now in the morning, the stock was up by around 1.5%, touching the 3-month high level, but currently it has slipped into red.
So that's Brigade currently trading under some pressure. But time now to welcome on board Jatin, who's joining us on the technical front. And Jatin, thanks so much for joining us on the show. And that's Jatin Gedia from Mirae Asset Share Khan, who's joining us on the show. And Jatin, let's talk about the stock that you've picked out for us. UltraTech Cement is the stock in question. Tell us what are the next levels you're spotting for this one. How is this stock placed on the charts? Because when I pull up the charts, year to date, the stock has done only 4% uptake. Last 1 month, last 5 days, it's been a slow mover. Tell us what's the levels that you're spotting on this one, because it has been a mover, but it's been a very slow one at that.
See, UltraTech Cement, I believe, has gone a decent amount of correction recently, and on the up now it has reversed its trend, and on the upside, I'm expecting levels of 12,120 to even 12,200 from a short-term perspective. We believe that the recent correction completed around the 40-day average, and thereafter it's starting the next leg of the up move. So I'm expecting a decent upside till 12,200 from a short-term perspective.
Cement, but Ravinder, take us through what's been happening with Kalpataru projects and what's the news flow here.
Project is being focused by Kalpataru Project International Limited, one of the leading engineering and construction player in power and infrastructure sector. Along with its international subsidiary, has secured new order worth of rupees 2,372 crore, and company has received order in the power transmission and distribution business in India and overseas market. And the orders in the company has also received order in building and factories businesses in India. So back of this new stock is up more than 4 to 5%.
Okay, good move coming in on Kalpataru projects. Jatin, coming to you, JSW Steel is the stock that you've picked out for us. Just today, the stock is up 4%. It's doing very well. Tell us what are the next key support levels that you're watching for the stock.
The metal pack has been in action since last couple of trading sessions. JSW Steel has provided a fresh breakout from a 2-day consolidation on the upside. Now the next crucial levels that we need to keep in mind is 1074, that was the previous all-time high, and thereafter 1100. So I believe that the stock is poised for a very strong up move over the next few trading sessions. Today it has also managed to close above its short-term moving averages, so that is an additional bullish indication from JSW Steel. So overall, technically, JSW Steel is poised for around 1100 on the upside.
All right, let's watch out for 1100 when it comes to JSW Steel. But another stock in focus is Jubin Foodworks. It's been a good set by the company, a beat on all the parameters. When we talk about revenue, that has seen a jump of close to 34%. The profit has been reported at 48 crores, but one should not look at the decline at 77% on a YY basis because there was an exceptional gain back in Q4 of FY24. The margins too were better than expected at 18.5%. In terms of the management commentary, they are highlighting that they have added actually 250 Domino stores in India, 30 in Turkey, as well as the business is coming off a high capex cycle and the future capex to be largely store and technology led. But other than that, the kind of decline that we are seeing, two reasons particularly. Firstly, the profit growth hasn't been that substantial for the company for this particular quarter, and other than that, there could be a sentimental hit as well because the company does have an exposure to places like Turkey, Azerbaijan, where we are witnessing that there are tensions that are boding well for these particular nations, and because of the exposure of Jubin Foodworks, maybe that is impacting the stock sentimentally, and the stock is down almost 2% as we speak right now.
Okay, big cut coming in on Jubin Foodworks. Let's move on. And Jatin, Hero MotoCorp is the stock that you've picked out for us. It's been a stellar few days coming in for Hero MotoCorp. Nifty gainer today as well. Last 6 months, however, the stock has seen a cut. Last 1 year also, the stock was lower by 15%. Do you believe that the recovery that we have been seeing on this stock post its earnings is here to stay, and on the charts also does it reflect the same?
Yeah, see, in the case of Hero MotoCorp, we are seeing a trend reversal on the weekly time frame chart. So I think this rally is sustainable, and post this around 40% cut on the stock. Now the stock is now trading above its crucial 200-day moving average. So I think the larger term trend or the longer term time frame chart is showing a trend reversal. In terms of levels, I am expecting around 4700 to 4800 levels on the upside. Today's price action is very decisive, so every dip from here on should be considered as a buying opportunity. We expect 4,800 in the stock over the next couple of weeks.
So that's the technical take on Hero MotoCorp, but a bit surprising indeed because the earnings did come out, Snehi, a couple of days back. The management commentary was good, the con call was good, but no significant stock move. But today
yes.
A 6% jump and one of the top gainers in Nifty 50. But sticking with the auto theme, Ansh, take us through what's been happening with Aisha Motors. A miss on the margins indeed.
That's right, and talking about revenue, that has gone up by more than 23% to 5,241 crore. Talking about net profit, that has also seen a very good jump of around 27% to 1,362 crore, which is better than the expectation actually. But if we talk about margins, then margins has actually gone down by around 252 basis point to 24%. Also, if we talk about other highlights, then EBITDA per vehicle has dipped to an 8-quarter low despite life high quarter volumes. And also, if you see on chart, then the stock is trading with a good gains of around 1.2% today.
Okay, so that's the take on Aisha Motors, but let's go across and listen into what the management had to say post their mixed set of quarter four earnings and their growth outlook going ahead. We interacted with them earlier. Let's go across and listen.
I think, EV, our Tortoise Royal Enfield's take on EV is through the Flying Flea, which is an endorsed brand. This is the brand which blends for city plus conditions, lightweight. That's the initial thought with which we will be entering. That's what is the platform which we are working on. As I mentioned, there are two products, which is C6 and a Scrambler take, which is S6. Both these products are very different products which are going to come in the Q4 of FY 23-26. It's only a starting. It can lend itself to the various form factors which we will keep looking at for the city plus. We are not at this stage envisaging to be a separate subsidiary or a separate business unit or something like that. It is part of the Royal Enfield, and there is a dedicated team of almost about 250 people who are working only on the electric, which is our Flying Flea to start as of now. So our Flying Flea, the endorsed brand of Royal Enfield, our focus will be making urban-focused city electric two-wheeler for the future, which is timeless yet modern technology and design, which is embedded into the motorcycle. That is what is our Flying Flea thought.
All right, but moving on, let's put the spotlight on Eternal. And Jatin, take us through what's been happening here. How do you see the technical setup of this particular counter?
See, this stock was consolidating in a range, and today we have got a breakout above the 3 week consolidation on the upside. So I believe that this 3 week consolidation has prepared a strong base for the next leg of the up move. And now the stock is poised towards level of 263 to 265, where the next resistance cluster kicks. So it's a good buy at current levels. We believe that the stock has a decent amount of support at 235 odd levels, which is the 20-day average. So a fresh breakout with volumes has occurred in the case of Internal. So we are expecting this up move to continue.
Okay, so positive view coming in on Eternalist while Zomato, but let's talk about an ET Now exclusive now. Sources tell ET Now that the government has finalized new electricity draft amendment bill and the power minister is set to take it in the cabinet soon. Prakash is joining us with more details on this. Prakash, tell us what are your sources telling you and what are you picking up?
Yes, we're learning from our sources that the government has given final shape to the new draft electricity amendment bill. That's an important development coming in. We're given to understand that the Power Ministry has incorporated necessary changes to the bill based on observations made by the Parliamentary Standing Committee. We're given to understand that the public comments on the draft bill will be invited soon. It is important to note that the bill was referred to the Parliamentary Standing Committee in 2022, and since then, stakeholder consultations have been taking place, which have been completed now, and the Power Ministry is moving ahead with the new draft bill. Sources are also indicating that the Ministry will approach the Cabinet after completing IMC process, and you are aware that the states had raised some concerns over several provisions of the bill that advocates entry of the private sector into power distribution sector. Discoms portability was also part of the proposal. Now, sources are indicating that the government is likely to revise certain provisions to gain state support, which is very crucial at this point of time. And this bill could play a significant role in the modernization of the power sector.
All right, thank you so much, Prakash, for getting us all those exclusive details. But with this, viewers, it's once again time to slip into a very short break. We'll be right back after this quick one. Welcome back to Market Fatafat, and it's indeed turning out to be the terrific Thursday for the markets, because just after the tepid start for the Indian markets, nobody must have actually thought that we will be building such strong gains on Nifty 50. We have surpassed that mark of 25,100 as well, and these levels were actually seen back in the month of October. And this is crucial to understand, because do remember that during the September end, Nifty actually did hit its all-time high levels, and since the start of October month, all that selling pressure trickled in, and we are once again back to the highs of 15th October levels. Let's see where the day settles, but indeed it's over 400 points of gain coming in for Nifty 50, while Nifty Banks standing strong and inching higher tick by tick. Actually, more than 660 points of gain is what we are seeing at this point in time, Sneh.
Absolutely. Sensex also almost 1400 points uptick coming in just on intraday basis. Seems like the bulls have taken charge, and how? It seems like there's no stopping for the bulls today, and we were worried about the levels we would see heading into expiry day today, but all of our players have been allayed for now. You can never say never when it comes to this market, especially on a Thursday.
Yes.
But looking good so far. So let's see what the rest of the trading session holds for us. But on that note, let's keep it going with all the stocks that are abuzz today, and TCS is the stock in focus today. They The TCS has achieved recognition as one of the top 100 valuable global brands in Kantar's Brand the Most Valuable Global Brands 2025 report. The company's brand value reached $57.3 billion, showing a significant growth of 28% on a year-on-year basis. A separate independent assessment by Momentum ITSMA revealed that TCS achieved 95% aided brand recognition amongst business leaders across 26 nations globally. This marks a substantial increase from the 29% awareness level recorded in the same survey in 2010, according to the company's press release quoted by the Economic Times. On the back of this positive news, though, TCS also up almost 1.5% and also gaining momentum just like the market.
All right, but moving on, and Jatin, take us through what's really been happening with Gale, one of the slow movers indeed. But do you see any signs of a breakout from these levels?
Yeah, so in the case of Gale, it has been definitely a slow mover, and this stock has now reached the crucial support zone of 183 odd levels, wherein the 40-day average is placed. Along with that, the daily lower Bollinger band is placed. So I believe that it's a very strong support cluster, and generally the stock holds on to this support and thereafter starts a fresh leg of performance. So it's currently trading at supports, which makes it a very attractive buy at current levels from a risk reward perspective. I believe that at current levels one can consider buying for a target of 196 from a short term perspective. So I think the risk reward is pretty attractive to go long at current levels.
All right, that's about Gale India. But moving on, let's put the spotlight on Piramal Pharma. This counter is in focus on the back of the earnings. This time, the revenue saw a growth of 8% on a YOY basis. The margins held steady, and profit after exceptional items has seen a jump of more than 50% right now. The outlook for the company, what they highlight is that they are on track to deliver their FY30 aspirations of becoming a $2 billion revenue company with 25% EBITDA margin and high teens ROS as well. But when we spoke with the management, they are highlighting and they are looking forward to quite a muted growth in the times ahead. They expect the next year to be a bit of a muted growth. They believe that in the short and the medium term, the uncertainty in the US markets does persist, and they're waiting for those to settle in. After that, they might actually form a clear-cut outlook. On Piramal Pharma earnings as well, we spoke with none other than Nandini Piramal. Let's go across and listen into them.
I think what we've said is it will be a muted revenue growth as well as EBITDA for the next year, but we do expect an increase in PAT, especially as we think that the geographical kind of alignment will happen. So we think that there will be better growth across each of the sites, so our tax rates should become closer to normal.
Okay, that's the word coming in from management at Piramal Pharma on the outlook ahead. But Ravinder, coming to you, Wipro is the stock that you've picked out for us. Tell us what the news flow here is.
Well, as Vipro is in focus, where Wipro has announced a digital transformation partnership with HUK, a leading publishing group based in the United Kingdom, and Wipro will help modernize HUK its IT infrastructure through the implementation of SAP and for HANA. And this adoption of SAP system delivered on Arise with SAP will allow HUK to transform its finance operation and core enterprise application, providing increased agility and speed and significantly enhancing source to pay operation. So back of this news, stock is up over 1%.
All right, that's about Wipro. But Ansh, take us through how are the earnings for Torrent Power?
So revenue was actually down by slightly 1.1% to 6,456 crore. But if we talk about net profit, then we are seeing a very good jump of around 146% from 430 crore, directly surpassing that 1,000 crore mark to reach at 1,059 crore. If we talk about EBITDA, then here also we are seeing good improvement of around 2%, whereas in margin also showed good improvement of around 50 basis point to 17.5%. Now in the morning session, we saw that the stock was trading with a good gains of around 1.5%, hitting 1 week high level. But after that, we are seeing that it has slipped into red right now.
Okay, so those are the earnings of Torrent Power. Jatin, coming to you, Dr. Reddy's Labs is the stock that you've picked out for us. Tell us what are the levels that you're spotting and how is the stock placed on the charts?
Yeah, so in the case of Dr. Reddy on the weekly charts, it has broken out from an inverted head and shoulders pattern. So that is a bullish trend reversal pattern. We believe that in the pharma space, this is one stock that we need to keep in on our radar. After a decent amount of correction, there are signs of a trend reversal. I am expecting levels of 1325 to 1350 in the case of Dr. Reddy, and the crucial support levels are placed at 1180. So a decent up move, a fresh breakout uh, is seen in the charts, and we are expecting a decent up move from a short-term perspective.
Okay, so those are the next levels to watch out for on Dr. Reddy's. Let's keep it going with the Pharma pack, and Bioon is also a stock that's been in focus today on the back of a brokerage note coming in from Investec. The market has recovered with Bioon still in the red today ever since the get-go, even though there is a very positive note coming in from Investec, wherein they've initiated coverage with a buy rating on Bioon and a target price of 400 rupees per share, citing its strong positioning in the global biosimilars market and robust growth potential across its business segments. While the company is well set up for expansion, Investec highlights that successful execution, particularly timely launches and market share gains, will be critical to delivering results in the future, and Bioon is expected to benefit significantly from its growing presence in biosimilars, especially in the American market. The company's biosimilars pipeline includes upcoming launches of multiple drugs and insulin aspart as well, both targeting significant market opportunities. So positive news flow on Bioon. Investec has initiated a buy, target price of 400 rupees. Still, the stock continues to be lackluster today, a 0.3% cut almost on Bioon as we speak.
Alright, that's about Bioon, but Ravinder, one of the high movers today is Vodafone Idea. Tell us what's the news flow here.
Well, yes, Vodafone Idea is launching its high-speed 5G services in Delhi NCR from May 15, marking a major milestone in its nationwide 5G rollout. And the capital region joins VI growing 5G footprint as a part of its initial phase of the rollout, which have already seen launches in Mumbai, Chandigarh and Patna. And the telecom company is also set to roll out 5G in 17 priority circles where it has acquired 5G spectrum by August this year. And VI introductory 5G offers include unlimited data for users with the 5G enabled devices on plans starting from rupees 299. So back of this news, stock is up approx 3%.
Okay, positive news though for Vodafone Idea. Let's pull up SBI. Jatin, that's the stock that you've picked out for us. It's been absolutely flat YTD last 6 months. In fact, last 1 month and last 5 days, we've seen a little bit of an uptick coming in on the stock. Tell us what are the next levels to watch out for when it comes to SBI.
See, overall the bank Nifty is looking for a fresh all-time high towards 57,000. So I think State Bank of India becomes the natural pick from the PSU basket. So it has been recently consolidating since last 3 to 4 trading sessions. I believe that this consolidation is near completion, and now we are expecting the next leg of up move to begin, which can take the stock towards 840, 845 odd levels on the upside. So consider buying State Bank of India at current levels. One should keep a stop loss of 780, or we can say the support is placed at 780, and on the upside 840, 850 is expected from a short-term perspective.
Alright, that's the take coming in on SBI, but with this viewers, we are completely timed out in this edition of Market Fatafat. Thank you so much Ravinder, Ansh as well as Jatin for taking the time out and highlighting all the counters that are buzzing in trade today. But with this viewers, it's a wrap from me and Snehi and the entire team who put the show together. Thanks so much for tuning in.